Hello again, RoyZesch.REALTOR here with Coldwell Banker Legacy in San Angelo. Today I want to talk to you about buying repossessed properties. Now, watch much TV shows, you know, people go in and buy these properties that are old, repossessed, whatever, and fix them up and flip them and seem to make lots of money on them, or fix them up in some really nice places. And that can happen. The key to realize is that there's more risk in these kind of deals. Don't expect to be able to go in and do that kind of stuff. A little bit of background. A lot of the repossessed properties we'll look at, they're HUD or VA. Those are, and Fannie Mae even would be some numbers, but the majority of them will be HUD or VA. Those are ones that the HUD and VA guarantee the loan. So somebody borrows money, buys a house, and unable to pay for it. The bank repossesses it, and then because HUD or VA is guaranteeing the loan, it goes back to them. So then there's government agencies that are operating this whole system, and they put them on the market, they list them, they price them, they do all the kind of stuff they do. So and there's huge variations in these. I mean, I've seen them from 30,000 to 300, well over 300,000. So there's large variables, but a lot of them will be in the 100,000-ish range. And typically when they go on the market, they'll be put on the market at or maybe even above market prices. And they sit on the market for a period of time, and then they drop in price over time, usually in fairly big chunks when they do, every 45 days or so, something like that. And then there's the process is similar to what it is with a normal house, but it's all through a government agency over their website. So you're going to the HUD website, for example, we'll put in the offer there, and then if they accept the offer, then they'll get back, they send us all the paperwork, which is their own paperwork, slightly different than the normal forms and stuff. So it's a little bit different than a normal one, but the basics of the procedure are pretty much the same. So now with all of these, particularly the government ones, the Fannie Mae, VA, and HUD, they give preference to owner occupants, and then less so to investors. So if you're looking for a house for you to live in, this is your advantage. HUD, for example, when it first comes on the market, they'll have a 10-day period that it's owner occupants only. So the only way they're going to sell that house is if you sign a statement saying we're going to live in this house. And then after that time frame, then they open it up to where investors are. And even within that time frame, the HUD, for example, they look at the offers every day. So if they have a number that they don't disclose, a certain percentage or a certain dollar amount of the offer price, and if you get above that threshold and no one else makes an offer, then they will accept your offer. So the thing is, if they have equal offers from an investor and an owner-occupant, they will prefer the owner-occupant. So again, it matters if you're looking at an investment property or something you want to live in. It's to your advantage if you want the owner-occupant, you're going to live in it, then it all works really well. So that's just a brief highlights of the process. There's, again, each Fannie Mae's got their website where you do their stuff. VA has their own rules and restrictions and requirements. For investors, an interesting thing with most of these is that you can't do an inspection. So a lot of times these properties, if someone starts to get behind on their mortgage, they're not doing maintenance on these houses, and so there can be some serious deferred maintenance, some issues like that. And for an investor, you can't, and I say you can't do an inspection, you can do an inspection, you just can't do it after the offer is accepted. You have to do it beforehand. So that delays the time for you to actually be able to put the offer in, as it gives, again, those owner-occupants a chance to get ahead of you, because the owner-occupant has a 15-day period after the offer is accepted that they can get out of the contract and do an inspection, and if they find anything wrong, they can get out of the contract. So anyway, there's just some odds and ends that make it different. There can be, I mean, there's some deals, if you're very cautious, sit around and watch and know the market, there are some deals that are really good on these places. You can find stuff that's on HUD or VA or whatever that you can get for 10% below market value, or even more than that on some occasions. Again, some of them are going to need a lot of work, some of them a little work. It just depends on the specifics of that property. So anyway, just something to think about. You can buy them as an investor, you can buy them for owner-occupant, and then put some work into them, fix them up the way you want them. Then you can sell them later, keep them, live in them, whatever suits you. So anyway, got more questions about this, give me a call. RoyZesch.REALTOR, 325-268-0775. Thank you.